Who here has trouble sleeping at night? Well, many investors will have trouble sleeping when they hold volatile and risky stocks because they put their hard-earned money into that and they don't want to lose it. But there's also a lot of investors that sleep just fine at night because they invest in quality, stable companies. And so I want to offer 3 companies that will help you sleep at night if you invest in them. These are stable, proven companies, and they're ones that will do well. They'll still perform well. They might not be an Nvidia, but they're not going to be a Warner Bros. Discovery or AT&T either. They're going to give you long-term wealth and growth of your money. And right now, we see a very small group of stocks propping up the stock market. I've heard it's the biggest concentration of a small group of stocks that hold the majority of the growth since the 1960s. So a lot of people are saying that there's a bubble right now. It could be an AI bubble, another tech bubble, or just really the market is getting ready to pop something soon that we'll all find out. But why would you want to stress about that based on the companies you hold? Now, I'm not saying that, of course, the Meta, the Microsoft, the Nvidia, the Amazon is something you shouldn't invest in, but maybe now those companies are starting to get to the point where they're not going to offer the type of growth that they have in the past couple years. Maybe they will for another year or two, but eventually they will top off. We will see a dip in these companies. It just happens. That's how the stock market works. So right now might be the time to keep invested, but maybe slow your pace of those big tech companies or the companies that have raced up and start putting some money into some safer, stable bets. And so that's what I'm here to share today. Now, maybe you do this too, but I like to think of products or services that I use around the house or in my life and then apply that to the general public to see if it is a product or service that everyone else uses. This creates that essential, necessary product or service that is something I can invest in through a company, and that creates the stability, right? Because it's something that is not probably going to be disrupted. So that is a great gauge to find a solid company that offers something, again, we cannot live without, that is essential, and that equates to a great investment that will do well in the long run. Now, these companies may not be sexy or exciting, but they offer stability in our portfolios, most likely outperformance, and we get to sleep well knowing that it would take a lot to disrupt these companies. So nowadays, I see too many investors chasing the next big thing to try and make the large sum of money that people promise and to do it in a very fast manner. But in reality, those trend chasers usually get burned by the way of massive losses. They are the type of investors that follow shady content creators who only care about the number of views their video gets, so they promote stocks by promising 10x returns in a year or some unobtainable nonsense. People buy into this and pour all their money into speculative investments, and it ends disastrously usually. But the slow and steady investor who still takes on some risk, doesn't mean you don't do any risk because you have to take some risk, but does so in a smart and non-impulsive way, makes all the profits, and long-term ends up with the $1 million plus portfolios. Why? Because they invested in high-quality companies that they know they can depend on, that have large moats, that provide necessary products or services. Really, they do their research and think things through, and it rewards them. It really is the slow and steady investor that wins the race. Very rarely do those that try to chase those trends and make the quick buck end up on top. It's like playing the lottery. It's not worth it with your hard-earned money. So I'm here to share 3 stocks that will allow you to sleep at night and that has a high probability of providing strong returns long term. Now, the first one came to me on a specific day of the week when I thought it would suck if this service was not provided, and that was on trash day. Imagine not having a trash collecting service. You can't, because it's always been there and always will. This is an essential service we cannot live without, and there is a high quality company who takes the trash out of our lives. And I'm not talking about X's, unfortunately, but the trash, the waste from our food and things like that, products we use, and that's Waste Management, ticker symbol WM. Now, it's a business that is easily understood, it's absolutely boring, and provides stable and growing revenue. Perfect. I love this. I already can sleep tonight just thinking about that. Now, the company has a wide economic moat from its landfill ownership and route density. In fact, this company's network of operations includes 413 collection operations, 370 transfer stations, 283 active landfill disposal sites, and 17 waste-to-energy plants, and 131 recycling plants, and 95 beneficial use landfill gas projects. So it has a lot. Now, Waste Management and Republic Services, another company, lead the solid waste management sector. Together, they own about 480 landfills out of the 2,627 landfills across the United States. So A, they own their landfills, which there are so many benefits to owning the land, and B, they have the largest market share. That's part of their moat, their competitive advantage. This allows Waste Management to increase its pricing faster than inflation. Waste Management also does acquisitions and recently purchased Stericycle. Waste Management has done great at reducing costs over the last decade as its operating margin climbed from 15% to 19.4%. And over the last decade, this stock's total return more than doubled the S&P 500. How's that for a boring stock? Now, Bill Gates even doubled down on his position of Waste Management in 2022. So we'll see here over the past year, it's up 23%. And then over the past 5 years, it's up over 78%. A very solid performer. That's fantastic. Now, this company, I put together the stock facts so we can briefly look at it. We will see it's a little pricey right now compared to its 5-year average when looking at its price to earnings. Trailing 12 months, it's at 34.45. Over the last 5 years, it's at 31.4. But guess what? That's usually the case for these high quality companies. If you just buy and invest now and buy regularly, shall I say, you will win in the end. Revenue is growing, maybe not at high rates, but it has historically, so I expect that trend to pick back up. But it has excellent gross margin at 39.49, great return on equity at 35.61, and it has a low debt profile, which is fantastic. Now, it does pay a dividend. It might not be as attractive as others. It's at 1.43%, the yield, but its payout ratio is healthy at a 49%. And look at that growth. The 1 and 5 year growth are in the 7% range. That's like getting a 7% raise every year. That's fantastic. Now, with analysts, they consider this stock at an outperform rating with an upside potential of 6.43%. Now, again, this is over the next 12 months, so you have to look past that. You have to look long term, and I expect this stock to be a clear winner. Some growth drivers for Waste Management. As a leading provider of comprehensive waste management and environmental services, Waste Management is poised to benefit from ongoing trends such as rising environmental concerns, so think of the recycling side of it, rapid industrialization, again, creates more waste, as well as population growth and proactive government measures to curb illegal dumping, which will push more business to waste management. So this is all great items to mention for its future growth. It should create another decade or two of you being able to sleep comfortably at night. Also, just think, when interest rates go down, that will spur more commercial projects across the nation, and that will create extra waste that Waste Management will take care of and make added revenue. Again, it's a bit expensive, but you're getting a stable quality industry giant that will be around beyond our lifetimes that will allow you to sleep comfortably at night. Not just the stock, but knowing your trash will be picked up week after week. Now, the next stock number 2, I'm going to go over the last two a little bit more quickly, but the second one is Berkshire Hathaway. We all know this Warren Buffett company. It's an amazing company. It's an insurance company at the heart, at its core, but we should categorize it as an ETF, as it owns or has majority ownership in over 70 companies. To name a few, do you use batteries around your household? Well, it owns Duracell. Do you like to eat fast food? So maybe Dairy Queen? It owns Dairy Queen. Also, for those who like jewelry, it owns a few jewelry companies. It also owns a railway company, BNSF, which we depend on that infrastructure to deliver goods. So that's definitely something that's needed in our lives. That's essential. It owns Clayton Homes. Homes are essential. Fruit of the Loom. Now that one, there's some different options out there, but definitely things like underwear is essential. Geico, an insurance company. In fact, it owns a few insurance companies. So really, insurance is something that we need these days and can't go without. It also owns some energy companies. Energy, we use that every single day, so definitely a necessity. And it owns things like Pilot Flying J. So that's, When I go travel, I do some road trips. I always stop at the Pilot Flying J's. So it's a gas station, it's a convenience store. They have things like showers for those that travel in semi trucks. It's a pretty, it has some vast offerings. And so I didn't know that. So that's kind of cool to know. Berkshire owns Russell Brands, which is an active wear company, and so much more. So there you see where the central necessity comes from with this company, in that it not only owns some of these companies that we need, but it acts as an ETF because it owns so many different companies. And it's just really a very safe, stable stock. In fact, you'll see here over the last 5 years, it's up over 93%. And it is still at an outperform rating by analysts with an upside potential of 8.16%. Now, revenue, I just wanted to show, it popped this last year from 2022 to 2023. That's very nice to see. So really, it's a very safe and stable investment that will allow you to sleep at night, and I would prefer a company like this to an ETF to avoid fees. Now, the last company that I want to mention that will help you sleep at night is Realty Income, a REIT. I think real estate is a great investment, but this allows you to avoid the headaches of managing a property yourself, and that's what Realty Income does for you. So Realty Income is as sturdy and reliable as they come regarding REITs. It has an amazing history of dividend growth and payouts, and it has recession-resistant tenants and has been expanding into other areas, so diversifying, like gaming and data centers. Now, I also own Vici. If you've watched my channel, I'm very bullish on Vici. It's a experiential REIT, but it is more risky than Realty Income because it's very concentrated in gaming and the Las Vegas Strip. So that's why I left it out, even though I think Vici is a better opportunity for growth. You just can't go wrong with Realty Income when you want to sleep at night. So regarding Realty Income, the thing with REITs, you want to see adjusted funds from operations growing. That's how you value a REIT and see how healthy it is financially, how it performs and everything. So I put the adjusted funds from operations and revenue side by side, and they're both going up, up, and up. Even during this time where REITs are being hit hard, it's still growing. So that's something to keep in mind. They are still proving very profitable. So with that said, they are at an outperform as well with an upside potential of 13.79%. And again, another sleep well at night stock that has delivered for a long time consistent financials and should continue to do so for a long time to come. Yes, the high rate environment has affected all REITs, but those with that growing AFFO will benefit the most when rates do get cut. Those will be the ones that get set apart and shown as the strong, sturdy performers that people are going to put their money into. So you can expect those investments to go up. So that's why I'm investing in Vici and Realty Income more heavily over the last year or two, because I can see the future, right? I'm not going to focus right now on what's popular, the tech stocks, the Nvidia. No, I'm going to look at strategically and plan what's going to happen in the future. And once those rates get cut, REITs, especially the ones that have been financially proving themselves, are going to really benefit. So there are my top three. You have Waste Management, you have Berkshire Hathaway, and Realty Income. Now, some people will think sleep well at night stocks are those like Pepsi or Coca-Cola, but to me, I disagree with that, because if as a consumer, I can switch from Coke to Pepsi to Dr. Pepper to any other beverage, or I can say I'm going to quit drinking Cokes altogether. I want to cut out my sugar. That's such an easy, quick decision that I can make to cut something out. To me, that's not a necessity. That's not something essential. And I just don't like that. Yes, it's still a solid company, everything, but I want something more solid, something more essential and necessary than a beverage company or snack company, because people can switch their preference of food just like that. I can do that in 2 seconds, and so could you. So that's why I prefer these stocks instead. And with that in mind, let's look at my portfolio. I'm up over 22%. You'll see the technology stocks, especially Microsoft and Amazon. Cisco's been a dud, but that one I don't want to talk about right now. But those two are up almost 100% for me. So when they do reach that, I think I'm going to celebrate and treat myself to, a nice dinner or something. I don't know. That's pretty cool. I do have Realty Income. Of course, my real estates, you'll see Vici. Vici in the purple, you'll see, is a much higher allocation of my portfolio at 15.35% compared to Realty Income, because I feel it has more potential to provide me those profits, those gains. But Realty Income is still a very solid, sturdy company that helps me sleep at night, which is why I still carry over 6% allocation in my portfolio. And once those rates get cut, these two will really be boosted in the allocation. And at that point, that's when I'll cool off on those investments and put it into other areas. So let me know, though, if you have any questions on this portfolio. I'm happy to talk about it. I'm someone that's going to be very transparent, honest, so be sure to subscribe. I show my failures, my successes. I show it all because it's how you guys learn best, and it's also how I learn best. And that's just being honest. That's just the right thing to do. So yes, again, while we are seeing a possible bubble with certain stocks, why not kind of slow down on those and put some into some safety stocks like the three I mentioned? That way you could sleep better at night, still capture gains and profits, and then start to also strategize going forward on where you might want to focus your portfolio in a way that it will outperform for you without some unnecessary risk. So with that said, let me know your thoughts and also tell me some of your sleep well at night stocks and why they're that way, because we want to share these all with each other so we can get some better sleep should it be our investments that are keeping us up at night. So we'll see you soon on Mark Arnold's Finance. Have a great day.